Welcome to the JD Show. We have with us amazing Simon Zutshi from PIN. Please help us welcome, you know him, Property Magic, founder of Crowd Property, founder of PIN. So yeah, great to have you here, Simon.
Thank you, Jack. Really great to be here, and hopefully we can share some really valuable information.
Exactly. I'm actually going to ask you some hard questions today. Are you ready?
I'm ready, Jack. Go for it.
Good stuff. All right. Okay.
Too hard.
Okay. Let's say someone has had enough of their job, and I think there is some research on that. There's quite a large population who are not happy with their jobs and what they do. And or let's say on the other side of the coin, maybe someone is running a small business, a cafe around the corner with a lot of respect, maybe enjoys, but now is hit a plateau, can't grow, doesn't make a lot of money. Now kind of getting to a point where they're fed up, and even though they love making coffees and, but they still are not loving it because they're not making enough money in their small business and feel like literally a slave of the system. How can they get to, and I'm going to ask you two level questions here. How can they get to 10 grand a month income, cash flow?
Yeah.
And the next level onto that is how can they get to 100,000 cash flow level? Let's tackle each of these at a time. So let's say 10 grand a month.
Okay.
Which strategies can someone focus on?
Okay. So first thing to say is to get to 10 grand a month is very possible, but let me be very clear, it's not easy.
No.
Okay. I think a lot of people look at property investing, looking for some get rich quick. Now, you can certainly make money quickly, but get rich quick suggests there's no effort. And I want to dispel the myth. There is certainly time and effort required. But what you got to do, I guess, is compare it to, you might be doing a job that you don't enjoy, spending 40 hours a week, or maybe you're running a business and you might enjoy your business, but it's not making enough money, etc. You might be putting 40, 50, 60 hours into your business. What you got to understand is, look, at the moment you're putting loads of money, loads of time into something else and not really getting what you want. So this is about using property as a vehicle to give you the income you want, so you have the freedom you want. And people say, yeah, but I don't really like it. You don't have to like property. You don't have to be passionate about property, because I didn't get into property for the sake of owning property. I got in property to give me financial independence.
That's right.
And so I think just get that distinction first of all. And what are the strategies to get there? Well, I think the strategy you use depends on a number of factors. It depends on your personal circumstances. For example, if you are in a job or running a business that's using all your time, there are certain strategies that might be better than other ones, because some need more time than others. Also, how much funding do you have? Now, most people think, I don't have much money, and you might have some money in the bank, you might have some inheritance, you might have some money in your business. That's all good money to start with, but at some point, everyone runs out of money. So recognize that as well. And the way that most people invest in property to acquire more assets that create money for them is by releasing equity from existing property. So you might have a mortgage you've been trying to pay down in your own home, or you might inherit a property. Those are perfect ways of using that equity to acquire more property. And to do that is sometimes counterintuitive, because, Jack, we're told that debt's bad. We're told we should pay down our own home mortgage. And that is good advice if you're only ever going to have one property.
Yeah.
But if you read books like Rich Dad, Poor Dad, or if you read my book, Property Magic, you'll understand actually you can use that equity to buy more assets that create the income for you, that give them the freedom.
That's right.
It's a bit of a leap of faith to do that. You've got to learn how to do that properly. But the good news is you're not the first person trying to do this. Hundreds of thousands and millions of people have done it before you. Okay. And so you're not trying to reinvent the wheel, which is great. So you got to think about your circumstances. You've got to think about the market. What's happening in the property market. Over the last 10 years throughout the UK, we've had pretty good growth. That was following the crash we had in 2008, 2009, because of the global financial crisis. I thought I was wrong. I thought we were going to have a property crash at the end of 2020. I wasn't the only one. Luckily, the Bank of England thought we were going to have a 16% crash. A lot of people thought it was going to happen because of the pandemic. I think the government reacted really well, put some strategies in place like the stamp duty holiday, the bounce back, all this stimulated the market. And so it's gone on. Now, the question is Is it going to continue to go up, or is it going to come down? And I don't know. No one knows, Jack. But actually, if you know what you're doing, it doesn't really matter what's happening in the market. You can still make money, but you might need to adapt your strategy to do that. Okay. So having said those things, think about your personal circumstances, thinking about the economy and what's happening in the market. You can then try to home in on some strategies. So if you want to get to 10K a month, you have a couple of choices. You could go and buy single let properties, which might give you 100 or a couple of £100 per month, but you're going to need 50 plus of those properties. And that's going to take a long time to acquire 50. Just even if you had the money to buy 50, just the time and energy to find them, to get them ready, it is ridiculous. So actually, rather than having lots of properties, I think a much smarter strategy is to have fewer properties, but ones that are more profitable. So that, you know, if you only need to get 10 properties instead of 50, you're going to get to 10 much quicker than you would get to 50.
That's true, yeah.
So rather than thinking numbers of properties, and often people who are inexperienced in property and they meet an experienced person, oh, how many properties you have? The number of properties you have isn't as important as what those properties actually do for you.
It's irrelevant how many properties you have. Yeah,
exactly. I know people who've got lots of properties, like 20 plus, but then for some reason they're not really making much money from it.
I know people with 700 plus properties, and I can assure you they're not.
Exactly. And so get away from this idea of lots. It's all about what the property has to. So let's focus in on what are some of the strategies that are more profitable and what might work really well in 2022. Well, one of my favorite strategies, I know people have different views on this, but one of my favorite strategies, and I'll tell you why, is houses of multiple occupation, HMOs.
Yes.
And if we take a house, instead of renting out on a single contract to a family or to a single person, you break them down into individual rooms. You have a contract on each room, an AST contract, and you have someone living there. So it's a shared house. Yeah. And the concept a lot of people are talking about these days is co-living. So what's co-living? Well, an HMO might be just a room in a house. Co-living is where you're a part of a community. Yeah. And it's not just a room and house, it's actually where you live, it's company, it's like-minded people you live with. You know, you have communal space where people can sit and eat together. None of this having kitchenettes in your room where people are sitting eating on their own. It's all about having a community. And especially given lockdown, where a lot of people that lived on their own were really isolated. They couldn't have friends visit them. A lot of people are craving this contact with other people.
That's true, yeah.
So I think the co-living concept is good. Now, we are going to see inflation. We are seeing inflation. We're going to see inflation. The cost of living is going up. So as cost of living goes up, people's the amount of money they have available to spend kind of contracts. And living in a shared house is more cost effective than living in, say, a studio on your own, where you've also got to pay all your bills as well as the rent, because in an HMO, generally the bills are included.
That's right.
Okay. So it's more cost effective. You have more community. Now, the thing that people say, they say, oh yeah, but Simon, there's a massive oversupply of HMOs. Why would you want to? And I agree. There is an oversupply of HMOs. However, and this is the important point, most of them are very average HMOs. They've got magnolia walls. They've got very boring furniture. You know, they're not great kitchens. And there's an oversupply of those. And years ago, when there were less properties, that was maybe fine. But these days, it's not up to standard. And so there is an oversupply, and that means that there always going to be some empty rooms in those very average properties. But that's also a huge opportunity, which I'll come back to later, Jack, if I may. Okay. Yes. So whenever there's a problem, the flip side of it is also an opportunity.
Yes.
But for many landlords, there's going to be this problem. They've got these properties and actually, you know, they're struggling. They've always rented them out before. They're struggling to rent them out and they're lowering the rents. So they've got voids, etc., etc. There are also people who have very high-end properties. They look fantastic. They've got a real community feel about them. Those landlords achieve a higher rent and they have a lower void period because they have people queuing up wanting to live in those properties.
That's right, yes.
There are plenty of very average properties, but there are less really high end. So if you want to do HMOs, the caveat is you have to have very high quality accommodation. And a lot of people think that when they think of HMOs, they think about student property. Now, student is just one of the type of tenants. in HMOs. You also get young professionals. There are people who've been to university, they've got a degree, they get a good career. They could be like a doctor, a teacher, a nurse, an engineer, an accountant, whatever. They've been to uni, they've been used to living with other people. You also get people who are just working, not been to uni, nothing wrong with that at all. They just went straight into work. Maybe they've only lived with mum and dad and now they don't want to live there anymore. So they're moving out for the first time. And also get people who are on benefits as well. Now, so there are 4 groups of people. Personally, I have benefit tenants in my single lets, but I don't have them in HMOs because they're more work. The only time I would do that is if you give it to a charity, which many of my students do. The charity looks after it. They get a much higher rent from the council and you get pretty much the full market rent for your HMO without any of the hassle. That can work really well, but you've got to pick a charity who really know what they're doing. So again, within any strategy, there are sub-strategies. You've got to work out what's right for you, what do you want to do, what's right for your area, etc. So HMOs, when done correctly, is definitely an opportunity.
Fantastic. Here is, in fact, there's few questions that you know, I'm buzzing. Sorry.
Okay, I was going to say, but if you've got questions about that, ask those. But I've got 2 other strategies as well.
Yes, please go ahead. Do share.
I was going to say,
in fact, let me ask you something, Simon.
Go for it.
I know that lately councils have been charging rates according to every room rather than the whole property, and that actually pushes the return on your investment or yield lower. How are you dealing with that, and how likely that is to go nationwide?
Okay, so a couple of things. You're absolutely right. In some areas, it's the valuation office have said, oh, well, that property, the valuation office has gone in and said, well, oh, we're going to ban these rooms individually, right? And there's a lot of confusion. If you actually go on the VOA website, they say any room that has a separate lock to it potentially could be banded as an individual unit. Now, a lot of people say, oh, they've got to have an ensuite, they've got to have a kitchenette, and then they're like a little studio. Now, if you have something like that, it's arguable, well, that is self-contained really, and maybe it should be banded individually. But if you just have a room on its own, well, that's not self-contained, but still it could be banded. And the biggest problem here is the inconsistency. There's inconsistency between valuation officers. There's inconsistency within different councils, even within the council. I've got a friend of mine, he's got 2 HMOs on the same road. One of them, the VOA have been in and individually banded. His house is fully en suite, and they've banded each individual room. He's got exactly the same property further down the street. They just have it as one property. So that's the real problem at the moment, is the inconsistency. If this was brought in around the country, everywhere, well, actually, that's not so much of a problem, because that one bill, the council tax, will be passed on to the tenant. Because if it is an individually banded unit, it's the tenant that's responsible to pay for that.
Exactly.
So that's passed on to them. And if everyone was doing it, it's not a problem. Where you have a slight problem is if you've got 2 properties,
inconsistency,
and one's banded, one isn't, the landlord's trying to put it onto the tenant. Well, it's more expensive for the tenant to live in that house.
Exactly.
That might hit the desirability of that particular property. So that is a problem. So, but it's interesting. You would think they'd go to all the HMO licensed properties and ban them. Well, they haven't. And I actually believe that it's something to do with planning. And remember, licensing and planning are totally separate things. They often get confused. Yeah. I think from what I've spotted, often it's when you put a planning application in, and the VOA officer looking at that saying, oh, that looks like an HMO, then they're kind of going and doing the valuation. Yeah. And I know people who've got lots of HMOs and none of them are individually banded, or just one property that's banded. But maybe that's because they're kind of, even though they're licensed HMOs, they're kind of off the radar of VOA. So it's the inconsistency that's really the problem.
That's really the problem. Yeah.
Remember, if you went to students, by the way, there is no council tax for students. So student market's not affected at all with this. And again, it's people are often scared about these things they worry about, and it's good to be aware of them. But very often people worry about things that are not actually problems.
Yeah. Thank you for answering that. Yeah, so I'm listening. I think you've got a couple of other strategies that you'd like to share, and I'll come back to the second question later.
Yeah, okay. So just other things I think are going to be potential booms in 2022, and it's linked to what I already touched on actually. The idea of this social housing. There are lots of charities that will take on properties, and they might be housing refugees, which we're seeing at the moment. They might be housing, ex-offenders, people coming out of the military who just need to readjust to life, drug offenders, single moms, whatever it might be, people who society needs to look after. And the councils don't have capacity to do it. So they get charities and registered providers to look after these people. They get a much higher rent. And it's kind of social housing or supporting houses is a big market that most investors don't really understand. I've got a big development. It was a care home we turned into 25 units. We've just sold it to a fund, a big fund, and they're buying these kind of units up. Then they're then renting them to a registered provider who's actually ironically based in Birmingham, or the property's up in Newcastle, and everyone's in the deals making money. And actually, if I was a bit smarter, I probably should have held on to the property and found a charity of that myself to manage it. But, you know, even that, you know, we tend to focus on the things we know about. Yep. And one of my things, I'm actually, this lady called Sarah Walker, who's one of our mastermind graduates, very, very knowledgeable. And I'm actually learning from Sarah because she's been in the industry for like 25 plus years. So watch this space, guys. I think the whole social housing thing is only going to grow. It's the government paying for it all, so you're guaranteed income.
Safer, yep.
Yes, it's safer. And actually, if you find a good charity registered provider to give it to, it's actually less hassle for you as well. So I think that's a really interesting play as well. And then the final thing, and this again, it might be a bit of a controversial one, is I think there's actually huge opportunity for serviced accommodation. That's where you take a property, you're renting out short term, typically a couple of days at a time. You get a much higher rent for that. You don't generally have occupancy all the time. You should plan to try and get occupancy. About 70% is a good target. If you can get 70%, that's pretty good. You might get more than that. You want to make sure it makes money at a minimum of 50%. Yep. 50% occupancy, it's got to make money, otherwise it's not a good deal.
Not a good deal, yeah.
And the key is it's called serviced accommodation. So service, it's a bit like a hotel is how you should imagine. So you come in, the tenants come in, there's, you know, the beds are made for them, there's nice, fresh, clean linen, they get the towels there and everything. They come in, they treat it a bit like their home. It might be a studio apartment, it might be a big house. I mean, I've stayed in several different versions of this as myself just on holiday. And it's great. It's a bit like a home from home. It's better than staying in a hotel. You can have a couple of friends staying together. It's more cost effective than being in a hotel as well. And you as a landlord, you take care of all the bills. You've got the laundry, the cleaning, so the extra cost to take care of. That's why you need to get a lot higher rent, and you rent them out through Airbnb and hotel.com, etc. And when the pandemic came, there were lots of people who were starting to do it. I think it wiped out a lot of the amateurs. And actually pandemic meant a lot of business shut down. A lot of my clients, particularly the ones in London who had Airbnb kind of style accommodation, they lost all of their tourists when the lockdown came. But then that they pivoted because they were in a community, they weren't panicking. We said what to do. They pivoted, and many of them very quickly were booked up by contractors, people who were working in London during the week, going home at the weekends on building sites and things, which all stayed open during the pandemic. They needed somewhere to stay, and they couldn't stay in hotels. So, you know, whatever you do, you got to pivot, you got to move quickly. And a lot of my clients did very, very well out of that. Now, what happened also when the lockdowns finish, everyone who's been pent up at home, they're desperate to get out. You know, you can travel internationally, but there are lots of restrictions, lots of hassles. And this summer, in 2021, we saw a massive boom. If you tried to go anywhere, if you left it too late, you were paying absolute extortionate amounts, but people were paying it because it was supply and demand. And I think that we have the continued uncertainty about international travel, about lockdowns and things. So I think that for the next year or two, service accommodation, in the right location is obviously very important. I think it's going to do very well, be very profitable. And except you might have some time where you can't have tenants in because of lockdowns and things. That might happen. But if you're prepared, you've got the courage to ride the wave, I think there could be a really good opportunity in service accommodation this year and next year. So those are my tips, if you like, for strategies I think will work really well over the next year or so.
Fantastic. Here is a very hardcore question for you. Okay. And the reason I'm asking this question is actually myself. And I feel that a lot of people are going to be able to relate to this question. Someone wakes up one day and says, you know what, I've had enough of this shit happening around me.
Yeah.
And I want to make 5, 10, 20 million in the next 2, 3, 4, 5 years. Okay. Can they do it? What would it take to do it? And what would you share? What would be your thoughts of sharing with them?
Okay. So yes, you can do it. Is it easy? Again, no, it's not.
No.
Do you have to work hard? Yes, you've got to work hard, and not just hard, you've got to work smart.
Yeah.
I think a key thing is, and sometimes people think, I've got to have a new idea. Well, you don't necessarily have to have a new idea. You just have to do something better than other people already. So you don't have to come up with a great innovation. You could just look at something that's in the market that there's a good demand for, and where you can actually, fill that demand and do a better job than other people and make good money doing it. So I think really to make those kind of numbers, you're looking at really developing and selling a business, because let's say you get a business that makes you even £1 million a year. Okay. That's a good income, but it's not going to make you 10, 20 million. But if you sold that business, depending who you sell it to, you might easily sell that for 10 million.
Yeah.
Now, can you build a business in 3 or 4 years to sell for 10 million? Absolutely, you can. I've recently just sold one of my businesses for more than that, but I've been doing that business a very long time. I've got another business which is probably going to sell in maybe 3 years or so. That'll be after 10 years. So I'm cranking down the time taken. And one of my goals is I've got a couple of ideas, having sold a few of my businesses, I've got a bit more time, or I will have more time. I've got 2 particular business ideas. And the idea is on both of those, within 3 years, to build a business that can be sold for more than 10 million. Now, there's important caveat. I probably won't do both of them. I'm probably going to have to pick one of them to focus on. And to do that, there's a couple of things you need to understand. First of all, you're not going to be able to do it on your own. You need to get other people in. And if you're trying to do everything, that's going to slow down the growth. You have to have rapid growth in a business to get to that kind of level of profitability. And also, if you're going to sell it to someone else, no one's going to buy it if it's just you. You've got to have systems in place, you've got to have people, you've got to have process, and that's what they're actually buying. That's why you get maybe a 10 times multiplier on the EBITDA, which is the profit before tax. Okay, so you got to treat it like a business. If you do that, you got to invest. So I've set up businesses where I've kind of what's called bootstrapping. You try and do it on a budget at first. Whenever I want to do something new, what I would do is this: I will go and find the best people who have already done what I want to do, and I will learn from them. And I will invest in myself to get knowledge. You might expect me to say that because I get people to come and do training with me. They're investing themselves, but they're acquiring lifelong skills that are going to change their lives forever.
That's right.
So many people, they want to get this big, I want to have this big property portfolio, I want to have this business worth this, and yet they're not prepared to invest. For you to have something like that, you need to become a certain type of person. And you probably need to upgrade the person you are now. And one of my favorite authors, a really good friend of mine, Dr. Benjamin Hardy, he talks a lot about your future self. And your future self is going to be bigger, better, more confident, more successful than you are right now. And it's because we're all growing and learning. And actually, if in a year's time you're not embarrassed where you were a year before, you're not growing enough. Yeah, basically. And if you want to build that kind of 5-10 million pound business, that's going to be an amazing growth curve. And here's a couple of distinctions for you around that, Jack. One is that you might be the person to set the business off, to get it going in the first place. But that's a different skill from someone to grow that business. Let me give you an example. One of my businesses is called Crowd Property. Yeah. It's a funder. I'm the original founder. Thinking smart, I got some co-founders to come in with me. I put the money in. I had the idea, but they were just as important in terms of the idea and the way it grew and the concept, etc. So I couldn't have done it without them. They couldn't have done it without me. That's a cooperation. And the idea is that I kind of lost my track there. And I set the things up, but I'm now very much not involved in the business. I still go to the board meetings. I'm the biggest shareholder, but I have a fantastic team who are doing a much better job than I would do growing the business. And so recognizing that you're going to need to get other people involved, your team, people who are better than you at some things. You don't want to be the smartest person in the room. You want to employ the smart people. And also, don't be cheap. You got to pay good money. If you want to have a £10 million business, whatever, you're not going to be paying someone minimum wage to grow that. And so that's why you got to change your thinking, change your mindset to see it as a business and invest in it and invest in yourself to get to that position.
Thank you, Simon, for sharing that. Let me add a couple of things that I think would massively benefit those who are watching this. Like you said, that you don't necessarily have to reinvent the wheel and you don't have to necessarily come up with a new idea. You can take something that's existing, make it slightly better, and then maybe plan to no, I don't like the word bootstrap actually in this case. If you want to scale it to 10 million plus, it's more about finding the investors and really scaling it and getting the right team in place, key. But I also feel that a person, and like you said, that you have to become a different person altogether. I feel at the back of this, not just that you have to become a different person, but a person's wealth and their bank balance, which can be two different things. The cash in your account and your wealth could be two different things.
Yeah.
I think is really equally proportional to your courage and your creativity.
Yeah.
I feel that a lot of people don't invest time into coming up with creative ideas, creating the prototype, and then going out there and pitching enough people, and then persisting enough with the idea to make it actually work to 10 million, maybe even 100 million plus level.
Yeah.
And that does require you to become a completely different person, not a little bit different, but a completely different person where you have almost no fear of losing out, because you may even lose out everything, right? Like you may lose everything, but you do have to become a different person. But creativity plays a major part. And I remember learning this from a chairman of a listed company that I used to serve in one of my previous businesses. And I was actually reading one of the creative books, and he actually said to me, "What are you reading?" And I said, "This is the book." And then he actually was with his missus at that point, and the missus goes, "Do you think people can be more creative by reading?" And the chairman said, "Yes, you can be. Yes, you can be a lot more creative if you read the right books." And then she didn't quite agree. But what the chairman did was, he actually called one of his managers and he said, "Can you order 200 copies for my executives in the office?" And that was but I do feel that your wealth and it's not, everyone's wealth is equally proportional to the courage and the creativity they bring into the picture. And I just feel that not a lot of people invest enough time in reflection, looking at what they've done so far and how can they be more creative. Even in property, it can be done with anything. I feel that is a part that's lacking with a lot of people.
Well, I do agree with you that I absolutely agree. There needs to be some creativity, but as I said earlier, actually it doesn't have to be you. Yeah. There could be someone else who comes.
That is true. That is true. Yeah.
So someone comes up with so look, one of my favorite creative strategies in property is purchase lease options.
I was going to ask you about that.
And it's a very creative strategy. By the way, the majority of investors don't even know what it is, or even if they do think they know what it is, they might have a misconceived what it is, because if they really knew what it was, they would have used it by now. Exactly. Okay. Yep. I'll give you a really quick 2 minutes here. So it's a way of you controlling a property where you can gain cash flow and equity growth on a property that you don't even own. Now, what that means is you don't need to put big 25% deposits in. You don't even need to get mortgages. And what you find someone who wants to sell their property. They don't want it anymore. Maybe they're a retiring landlord or a retired landlord, for example, and you give them more money than they would get if they sold it conventionally. And the way you do that, you give them, you agree a price for you to buy it, but you buy it in the future. In the meantime, you take away the hassle, you manage it for them, just like you would if you bought a property, but you don't have to put a deposit in and get a mortgage. It stays in their name. There might be a mortgage, it might not, in their name. And you get the cash flow and the equity growth. And you can give them some of that monthly cash flow in addition to what you're going to give them for the end purchase price. So it means they get more money than if they just sold it straight away. Now, this only works in certain circumstances. If someone's selling a property now because they need the money now, because they want to pay their daughter's wedding or pay off their home mortgage or invest in cryptocurrency or put money into business, then it's not going to work because they're not going to get the money now. And to be honest, that's the vast majority of people selling property. But there's also a smaller group of people who are selling property not because they need the money, but they just don't want the property anymore. So if we can find those people, and often they're landlords, they're just disposing of their portfolio. And there are a lot of landlords who've done very well over the last 10 years. They're cashing in now because they don't like the new legislation. They're worried about interest rate rises. They're worried about Section 24 tax and the impact on them. So all these things are causing lots and lots of landlords to start to sell some of their properties. We can find these people and find this ethical win-win. It's a great deal for them, great deal for us. So and you don't need to come up with that creative strategy because, well, we've already done the thinking for you. Yeah. You just need to understand it, and then you need to implement it and go and put it into practice. Does that make sense, Jack?
Yes, it does. So here is a question for you, Simon. Where can people learn this? Where can they find you? Tell us a bit more. Okay, so a couple of things then. If you haven't read my book, Property Magic, that would be a really good place to start. Yeah. You can buy it on Amazon, Kindle, or you can listen on audio from Audible. I prefer to listen to books, so I do it when I'm doing other things personally. So that's a good use of time. So that's one thing you could do. If you have read it, I encourage you to go and read it. Make sure you've got the latest 6th edition because we do keep on updating it. And I'm probably going to have to put a new edition out probably towards the end of this year because of all the changes that have happened. But, you know, the market keeps on changing, so you need to keep updated. And I'd read it again because I promise you, you'll see things and hear things you missed the first time round because you're in a different place now than when you first read it. Okay, so I'd suggest you look at that. That's one resource. Jack, we've got some online training all about purchase lease options and how you can use them. And if you haven't heard about it, or you think you have but haven't done any of them yet, I really would encourage you to have an open mind, and it's completely free training. I'm sure Jack will give you a link to maybe put somewhere around this video if you can click on it. We're going to be doing it pretty soon, so I'd take action now. Click on the link, come and register. And if you're quick enough, it'll be live. If not, it'll just be recorded. But the benefit of live is you get to ask questions and things. So take action, and that will really help understand that particular strategy. And you know what? If someone's either new to property, if I lost everything tomorrow, Jack, and I had to go back to the beginning, I would want to, knowing what I know now, I'd want to learn and use purchase lease options for the simple reason that, first of all, not many other investors actually know how to do them properly. So there's not that much competition. You don't need deposits, you don't need mortgages. And actually you can use a purchase lease option in conjunction with any other strategy, whether you're doing HMOs or doing service accommodation or single lets or commercial development or commercial property, whatever it is, in the right circumstances, you can do. So they're very versatile. So I do it if I started, but also as an experienced investor, when you run out of your own cash, it's a way of rapidly building your portfolio without having to use your own resources. So I'd highly recommend that. That's probably the best way to get some training. And the final thing, Jack, is we have our PIN meetings, our Property Investor Network, 50 meetings around the country. At time of recording this, January 22, we're just going back to 30 live meetings and 20 virtual. If you go to pinmeeting.co.uk, you'll see a list of them all around the country. It's a great place to kind of learn to build your network. I'm sure you agree, Jack, and you know this, your network is your net worth. The more people you know, the more people you can pick up the phone to, the better. So network is a great place to meet those kind of people. Find out what other people in your area, what's working, what isn't working. It's a great way to build your knowledge. And it's £20 to come along. But Jack, I think you have a code that we can put by the video that if someone hasn't been to a PIN meeting before, with your compliments, they can come to the very first one completely free. They just use the code that'll be somewhere around this video, and come and check it out. It's a great way to build your network. So those are some resources that hopefully help people. Fantastic. I mean, I can't tell you the number of people that I've recommended your book to, like literally thousands of people that I've spoken with. And pretty much, I think everyone within PEN knows, I'm fond of you. I admire what you've done, what you've achieved in your life. And, I always share all of this with people that are like, look, you got to go and get Property Magic. And also, when you're watching this video, either below or above or somewhere around this video, you're going to find a link, go get registered. I mean, I cannot insist enough how Simon sometimes can make an idea, kind of peel all the layers and make it look so simple, even though sometimes it's complicated, but he can make it look so simple. And so go get registered, learn about purchase lease options. That's an amazing way to build your wealth. Plus, the cash flow at the back of that.
Also, Jack, I'm also delighted that you've asked me to be one of the speakers at your event
yes.
in April, which I'm looking forward to. And I'm going to be talking all about creative finance. So not just options, but some of the other ways that you can acquire property using very little of your own money. And it's really going to expand people's minds and get them thinking in a different way. So I'm really looking forward to speaking at your event.
I am super excited about that event, because when I announced that event, I mean, I'm very realistic with my skill level. The last event that I did, I had about 360 people registered.
That's good.
And I remember when I wanted to announce an event where we're going to have 1,000 registrations, I was actually scared. But I've just become that person who likes challenges. And we already have, I think, 340 plus something people registered for this event. And I know we're going to hit 1,000 people. So yeah, I'm super excited to have you on, on that event. And yeah, I can't wait to ask you more creative finance questions. You know that I'm a finance broker, so I'm gonna break it down and I'm gonna ask you strange questions. But guess what? That's how my mind works, and that's how we bring value on the table for everyone. But yeah, I'm super excited for that. But you will not find the link to that event, because that will dilute what we are trying to do here. Okay. You can find it probably somewhere else.
Yeah.
Yes. So again, thank you, Simon, for being with us here. Have an absolutely amazing day, and I will see you very, very soon.
My pleasure. Thank you, Jack. Thank you, everyone.